Welcome everyone, and thank you for attending today's OD6 Metals Investor Briefing webinar. My name is Nicola Gazzatti of Investor Relations Consultancy Corporate Storytime. OD6 Metals is an ASX-listed company pursuing exploration and development opportunities within the rare earth sector. The company has successfully identified clay-hosted rare earths at its 100% owned Splinter Rock and Grass Patch projects, which are located in the Esperance goldfields regions of Western Australia. OD6 has today announced a substantially upgraded mineral resource estimate for the Splinter Rock rare earth project, and I'm delighted to have Managing Director Brett Hazelden here with me today to run through an investor presentation. We will then follow this by a Q&A session. So without any further ado, I'm pleased to hand over to Brett.
Thanks, Nicola, and thanks for everyone for joining today. Australia's largest clay-hosted mineral resource estimate is what we've got, and we've always had for the last year or so, and we've doubled that resource since last year. So a bit of a summary on the resource itself, and we'll touch on the project, and then do some Q&A at the end of it. So let's talk about Splinter Rock today. We won't talk about Grass Patch. It's obviously a secondary project to ourselves, but Splinter Rock itself is a standout. It's globally significant. We'll see that in a couple of slides' time on some of our bubble charts that we put out there. But 682 million tonnes at 1,338 ppm trio, and that's using 1,000 parts per million cut-off grade. There's only two of us that I'm aware of to date that are using 1,000 parts per million cut-off grade. And if we use the lower grade, then we go into billions of tonnes. So it's a significant point for us. We think 1,000 parts per million is where the economic cut-off grades do sit. So what does that total into? That totals into 910,000 tonnes of total rare earth oxides prior to recoveries, but that's a big resource by global scale. Importantly, for our Inside Centre project, we've put an indicated resource on that, 119 million tonnes at 1,632 ppm. Again, grade's a little bit higher there. It's consistent all the way through the profile, and I'll touch on that a little bit later as well. So the other key one for us is obviously our location, and we are sitting close to a port, close to the existing roads, renewable energy in the area, and all those other key ticks in the boxes that you need. So let's touch on the mineral resource estimate. A few slides on this, just getting through the detail. So as you can see, there's a summary there. I've mentioned the numbers, 682 million tonnes. It's made up of those 6 different main prospects, and we're deliberately broken out Inside Centre just because it is a standout and also slightly separate in terms of where it sits there. Importantly, the Mag Rio grades there are sitting around that 23% mark, and that's where 90% of the profit will come from going forward. NdPr, terbium, dysprosium, all the good levels from a rare earth point of view, and a good balance there as well. I did mention earlier that we've chosen 1,000 parts per million cut-off grade. You can see that in the middle and highlighted in blue through there. If we did use a lower cut-off grade, say 600 parts per million trio, there's 1.6 billion tonnes, still at 1,000 parts per million total rare earth oxide. So the project is massive. Its scale is world-class. What we're really looking for is focusing on the best areas. We want a high-grade starter. We want the recovery to be good. We want low stripping ratios, and we want those reagent consumptions and costs to be obviously low as well. And that's where Inside Centre definitely comes in and increases that grade even further. So let's do a bit of comparison around the globe and also in Australia. In Australia, you can see the slightly lightly coloured ones on the left-hand side there, where you do stand out from those sort of 100 to 200 million tonne projects, now sitting at over 600 million tonnes ourselves. So we move away from most of the peers in the Australian space, and we move into where we're sitting Brazilian rare earths at their $400 or $500 million market cap, having a lower tonnage to us, slightly higher grade, but not by much. Serra Verde, that's similar grade, a little bit lower, but slightly larger. But we're competitive with all of those ones that are out there at the moment in China and also in Africa, being IXR as well. Meteoric's obviously one that stands out in terms of higher grade, and is obviously one of those ones in the industry. I will mention now what the industry does need is another 10 to 20 mines to come on board to meet the forecast demand over the next decade or two. So this is not saying who's better and who's worse. What it's really trying to say is There's lots of mines here that have potential of getting up and running, and we think we're one of the better ones, given the size and grade that we're actually getting, and we're competitive with what seems to be a Brazilian theme at the moment, without the royalty rates, in terms of private royalties that are on top of government royalties. And we'll continue looking to expand that mineral resource estimate at the moment. But it's fair to say that we've got enough tonnes. Now we just need to start working through the various development scenarios. In terms of the exploration program, you can see on the left-hand side the different geologies and the different locations of the main prospects there, and also where we've put the resource areas. And on the right-hand side, that's correlated with our airborne electromagnetic survey as well. This is important, especially from how we've actually defined our resources. The AEM is clearly showing where the clays are, how big the areas are, and we're only just scratching the surface on what we've found to date. They do delineate the ore bodies really, really well, and the step-out drilling, the parallel drilling, and a lot of the other angle drillings that we're doing is just continuing to show the consistency of those clay basins, and that they remain open in multiple directions. And areas like Tighthead and Loosehead that aren't on here, but that's to the north, that we recently received a grant from the state government to do further drilling out there as well. In terms of the conceptual geological model formations, CSIRO's helped us with this. It's been done in conjunction with the AEM survey and also a whole heap of downhole works as well. That work's coming to completion as we speak, so we'll be able to talk a little bit more on some of the detail that we're seeing in terms of the high-level work, where we're seeing some of the geological formations and how that's actually been formed. But I will point out that we do see two different areas. We see big clay basins with two lower in situ weathered layers, with a layer above it being mobilised weathering product that's come in. They all hold rare earths. Generally, the lower areas have a little bit higher grade. And then on the right-hand side, you'll see an area like this one here, which is just purely an in situ weathered area, which is typical of our inside centre project. That hasn't had any rivers or streams necessarily flowing through and eroding it, so it maintains really thick intersections of up to 70 metres thick and good grades. And what we're also seeing from the metallurgical point of view, we do see consistent recoveries all the way through that profile, whereas a number of other projects around the world, you'll see a recovery drop off as it becomes more and more refractory as such. In terms of inside centre, let's focus on inside centre for the moment. So there's some wireframe models there. You can see inside centre at the front of the project in red here, with our centre project shown in orange. The main focus going forward will be inside centre given the grade, but also on the right-hand side here, you can see some of the differences in terms of also thickness, grade, and you can see the profiles where you get these lower grade areas that have been weathered out and then replaced as well. So the understanding of the geology is really coming forward with the help of CSIRO. The metallurgy is also there with ANSTO, and the areas we're talking about are quite massive when you start looking at some of these being 5-10 kilometres in width and length. And especially still open at various areas as well. So we'll continue to expand it, but the basis for the scoping study moving forward will be the inside centre project. This is an updated slide that we've used in the past. It's again just showing the split on what our various 15 different rare earth elements are, what the value is, and the distribution. Again, just showing we've got high NdPr, dysprosium and terbium, and that's where the value really sits in terms of what we'll be mining, and it'll be a key focus for us moving forward as well. So let's turn to the project a little bit more detail. So we'll touch on each of these 5 different areas. So let's just jump straight into those. We're aware of the periodic table and where it all sits, and that there's a whole heap of strange named rare earth elements at the bottom of the periodic table. And the NdPr, dysprosium and terbium are the main elements of concern going into electric vehicles, wind turbines, even going into robotics. So robotics will be an interesting driver for it going forward. It'll go into all the arms, anything that's moving going forward. So we'll see some big growth areas there. It goes into air conditioners, it goes into mobile phones. The demand there, in pink at the bottom, you can see the existing operations, the Mountain Pass, the Linus, and the various Chinese projects around the world. They're also then looking to continue to expand their operations, which you're seeing the capital expenditure on at the moment. Recycling will start coming in, but there's still a big gap on new projects and demand growth that's expected out there. So the growth is sort of predicted to grow by that 80% by 2035, which is equivalent to about 10 to 20 new mines. So lots of demand. There's some price scenarios that people are putting out there well and above $100 a kilo of NdPr. We think they might be a little bit optimistic, and if you can get a project to be profitable, which we believe we can here with our project, that is only receiving prices of between $75 and $100 a kilo of NdPr and still being in those lowest quartiles and half, then that's really what the focus needs to be going forward, and that's where we think we'll sit. In terms of the project location, it is key here. We're not in the middle of nowhere. We are only 100 kilometres from the beautiful town of Esperance. Some wonderful sandy beaches. There's a big port down there, Cape-sized ships, sea containers come in and out. Our product will be shipped out in sea containers. There's nothing to be done there. It's already happening. So no capital to be expended from that point of view. We're also located next to the roads. There's main sealed roads servicing the majority of the area. The last 20 to 30 Ks would look to obviously seal from into the final project. And it's also got proven renewable power down in the area. Esperance has been a major wind generator for a long time. They've now recently installed 2 large 4.5 megawatt units along with the solar panels as well, and that's achieving a 70% penetration rate over the year. So that's fundamental to us also looking at what our energy mix will be going forward. We do like to sort of talk about what do we think a project, an economic project looks like. We've deliberately chosen 1,000 parts per million cutoff grade. Just as we run through the financials and the numbers, the margins and how much money you can actually get in revenue, we just think you need 1,000 ppm trio or above, but really if you can get to the 1,500 and above, you start really getting the projects to sing. You'll be looking at, there's a lot of analysts have put out there, 5 million tonne per annum projects and above. Anything below that really just doesn't generate enough income, and you also need recoveries. Above 50% is what we say, but if we can get 60%, that's good. And the other point we really like to point out is payability. So if you're producing a mixed rare earth carbonate, you get 70% payability on a rare earth oxide price. And that's really important because we will looking at going down to a rare earth oxide stage 2 project in us, but 70% payability is good. If you're producing a monazite or any of those mineral sand derivatives, generally you're only getting around 30 to 40% payability. So when people look at rare earth projects and start comparing them, you really need to consider what they'll actually get paid for the final product. We also think 20-year mine life, resource sizes based on 5 by 20, you certainly need to be getting well above 150 million tonne resource sizes, and you need low strapping ratios. And key for any project going forward, including ours and others, will be low reagent usage, low costs associated with that. So if you can make your own on site without having to transport 60% water around the countryside or bulk bags from various parts, that's really important as well. And low power costs will also set you apart. Metallurgy is a big one. Everyone wants to try and differentiate between ionic clays and clays like ourselves. They're all clays. They all have a portion of ionic. We've got a portion of ionic. We've got a portion of acid recoverable, and we all have a portion of refractory, which is effectively monazite. You'll see it in the recoveries on the next slide, but we're all achieving those 60% recoveries in for our project comparatively to Brazil. We've put out what our reagent consumptions are, looking at around that 15 to 16 kilograms of hydrochloric acid per tonne of ore consumed. But interesting enough, we're looking to produce the hydrochloric acid on site, and the second product that comes out of that process is sodium hydroxide, and you actually need that to be able to precipitate out your impurities and also your final product at MREC as well. So we get that for free going forward. So we really need to change the conversation from ionic versus anything else to what is your total cost basis on a cost per tonne and a cost per kilo of NdPr or equivalent, and start talking about all the reagents that are out there. The only one in Brazil that I'm aware of that has put figures out there are Clara, and where they're obviously comparing ourselves out there to those. And we think our operating cost might be only 10 to 20% higher based on the increased reagent usage and a lower pH. However, that's probably more than offset by a lot of the private royalties that the Brazilian players are having to pay at between 3 to 5% gross revenue as well. So we don't see that as a major difference. Our grades are very similar, with the exception of meteoric, and we've got those tonnage bases there. So the other interesting thing for our recoveries is the recoveries are very consistent all the way down the profile, which you do tend to see that drop off in a lot of the Brazilian areas as well. So my belief, and I think that will happen over time, as a lot of the Brazilians will need to drop their pH levels to actually chase recovery as they go deeper and deeper in those ore bodies. So there's some recovery comparisons. This was originally done by Brazilian Critical Minerals. They've got that 68% recovery, slightly lower grade, but also slightly higher NdPr or mag-reo percentages. So they're actually not a little bad little project. I quite like them. They're all good projects. And as I say, we need 10 more on there. But just to point out, OD6 is getting similar recoveries to what every other Brazilian player is, and in some cases we're exceeding those. The key point now is everyone needs to show what their total reagent usage will be, including your acids, your bases, and flocculants, etc. So that's really where we need to get to. I won't go through the processing steps other than say we're all going to dig it up. We're all going to have an acid leach or a leaching process of between 1 to 6 hours. We will all separate the solids from liquids using a filter press. The liquids that will then be treated to remove the impurities. We will have slightly more impurities in terms of aluminium and iron, but interesting to note, our aluminium and iron percentages that we're actually recovering into solution is only about 1%. So the ratios are relatively low, but that will all come out in the mix as we do further and further work, which is being conducted at ANSTO at the moment. We're doing those focusing on both prop and also inside centre for impurity removal, precipitation, and also production of an MREC. As I mentioned earlier, we'll also look at a stage 2 of potentially producing a rare earth oxide and seeing where the capital cost sits to produce that versus the gains, but also the payability increases from that 70 to 80%. We do have a disciplined approach. We're trying to just work through it methodically. We're not trying to rush through and produce a dirty MREC that really isn't representative of anything. We do want to produce a project that looks at the grade, looks at the stripping ratios, runs through the process in detail, understands the actual consumptions, where the profitability sits, where your levers are in terms of higher grades, lower grades, higher recoveries, lower recoveries, and total profit in the end. So that's really what we're working through with CSIRO and ANSTO, and then obviously getting to a scoping study, which is what we're planning to have out by the end of the year. I'll put this comparison up there. We've been putting it in there. There's just, I don't really understand why the investors are so promotional on the VTMs, or the MEIs, the Brazilian rare earths, etc., in terms of what value they're placing on their market caps versus their tonnages and grades. The recoveries are similar versus OD6 sitting at that value down there. So $10 million market cap for us versus $500 million for others. And these are the value per mag-reo ton that are out there. So we just don't see that value discrepancy is justified. We do see ourselves as being a higher value project than that's out there. We're hoping to see that MRE start shining through, people start understanding that. The geometallurgical work that will continue to focus and put out as news flow, as catalysts going through the next 6 months as well. That's then leading into the inside centre scoping study that we'll look to put out towards the end of the year. The other one that's probably the elephant in the room is also rare earth prices as well. Rare earth prices have come off from those $120 to $200 a kilo NdPr prices. They're now back to about $55 a kilo NdPr price. No one's making money at that price at the moment, as Luke has shown a couple of weeks ago in some of their presentations. That's including Lynas, Mountain Pass, and the three main Chinese players that produce MREC products that then get sold to other downstream processes to turn into a metal and then into a magnet. So we are highly leveraged at the moment to a return to higher prices. Do we think that they'll be above $100 a kilo? No, but we think they'll be somewhere between $75 and $100 a kilo. And that's realistically where we think long-term prices will probably sit. Anything above $100 a kilo, our discussions with various parties overseas suggests that that's probably not sustainable and also not realistic, and other parties will start looking at other sources other than rare earths for various components, whether it's in air conditioners or cars or whatever else. And finally, we'll just touch on the Splinter Rock project. Just a couple of little summary points here. We are located in Australia, so it is a Tier 1 jurisdiction. It is a Western area. It's not a brick country or anything else. We do have good metallurgical recoveries that are underpinning this. We're still doing the work with ANSTO on impurity removals and the final product, but that we believe will continue to go through the process. And it's probably worth also noting that ANSTO has been given $10 million by the Australian government to make sure processes like ours are solved and they can develop these type of projects in Australia. We've got no private royalties. We're also not on farming land. It's a misnomer. We're not on farming land. A lot of the other companies in Brazil, overseas, and Western Australia are. We're sitting on vacant crown land. We've got no heritage issues that have been identified to date. We've done the ethnographic clearances and we're fine as well. We've got no major issues that we've found to date in terms of environmental. We've got a very clean, simple structure. We've got access to all the commodities on our tenements. We're not just restricted to rare earths, which I think people need to consider going forward. And we've developed a really strong relationship with the Esperance community down there. So look, the project's good. We're happy with where it sits. We're just getting about our business and trying to differentiate ourselves from the various projects around the world, but we need multiple projects. Nicola.
Thanks for the presentation, Brett. I'll just get you to stop sharing your screen. Beautiful. And we'll now move on to our Q&A session. So we have got a few questions to get through. The Brazilian clay-hosted rare earths plays have received very substantial market interest recently. How does the Splinter Rock deposit compare to some of the Brazilian projects with reference to metallurgical recoveries, deposit sizes and grades?
Yeah, so look, Nicola, I probably touched on that throughout the process, but just a bit of a recap. So 60% recoveries are equivalent to most of the Brazilian guys. Some are higher, some are lower. In terms of grade, we're generally, again, some are higher, some are lower, but generally size in terms of quantity, grade, and also recoveries are very similar. The only one that's a little bit different is meteoric out there, but a little bit higher grade. The rest of it's the same.
Thanks, Brett. Our next question. Can you please explain the advantage of OD6 enjoys by being within a reasonable distance from the Esperance port in the event that Splinter Rock becomes a commercial rare earths business? What sort of logistics will be required to operate?
Yeah, so logistics-wise, I mentioned the ports there. There's sea containers that would be shipping it out from. So effectively what we'd have is probably about 5,000 tonnes per annum of total rare earths in that range being trucked from site down to the port in sea containers. So we'll be going onto existing roads, into an existing port facility. There's no major costs impost to us there, with the exception of probably sealing the last few kilometres of road. So we get winter access throughout the year. So it's a pretty simple structure.
That's great, Brett. Our next question. Splinter Rock is the largest and highest grade clay-hosted rare earths deposit in Australia. Is OD6 now prioritising project development over resource expansion?
So two parts of that question. There's plenty of areas that are really open to further exploration that we need to be considering and looking at. That said, we've got enough tonnes. How many tonnes do you need is the question to do a scoping study. So our priority is going to be on the scoping study and the ANSTO work for the next 6 months. It's rain season, wet season, effectively, or winter down in Esperance. So we won't look to do any more drilling until towards the end of this year or Q4 at this stage. We also did recently receive an EIS grant from the state government. That's our second one. The first one really underpins a lot of the results that we've seen in this resource announcement. So the other area that we've been awarded the value for or the money for is our Loosehead and Tighthead areas, two other rugby names if people haven't figured that out, but they're to the north east. And they actually look really prospective. That was identified out of the CSIRO work. And it's something that we should be following up because they look like having low stripping ratios and similar properties to what we think might be at our Insight Centre.
Thank you, Brett. Our next question, can you please explain the ongoing role of Euroz Hartleys with OD6 and when this engagement commenced?
So Euroz Hartleys, we only brought them on a couple of months back. They were brought on to assist us with the last capital raise. Canaccord did the first IPO capital raise with ourselves. They're still involved in the company. But Euroz Hartleys was brought on as part of their a boutique, well, not boutique, they're quite a large broker in Western Australia that has East Coast reach and everything else. So we're looking for getting the word out to more people, more brokers, and also utilise their expertise going forward to hopefully get some research reports and other things on the company going forward.
Excellent, thank you. Our next question, you have stated the aim of completing a scoping study by the end of the year. Can you give us any guidance or examples of expected capital and operating costs?
Yeah, so that's a tough one for us from our various ASX and ASIC rules there. But just to give you some guidance, a lot of the analysts are anticipating, and they're out in public, they're anticipating these projects need to be about 5 million tonne per annum. That's including ourselves, Meteoric, IXR, etc. have put out results around those type of numbers. To give you an idea around operating costs, we're all going to have a similar process flow sheet. We'll all have a general and overhead, which will probably be, again, some analyst numbers that are out there, $1 to $1.50 a tonne for that. The mining costs will be based on your stripping ratios, but the cost to move a tonne of clay nowadays is probably about $2 a tonne, and the stripping cost is less than $1. So somewhere between $2 to $4 a tonne will be your mining costs. Your processing costs are generally about $5 a tonne, which includes people and power and all those. And then if we add the reagents, we've said our reagent cost is expected to be around $5 a tonne. And if you add all that up, that gets to about $15 a tonne in my head, off the top of my head, working through that. So that's pretty competitive in today's world. In terms of converting that to a total rare earth oxide price, I can't quite do that in my head that quickly. But as I mentioned earlier, most projects aren't making money at the current pricing, so the pricing needs to go up. But we expect that total rare earth oxide price cost would actually be lower than a lot of the hard rock guys. And we do see clay-hosted rare earths, being it ourselves, Meteoric, Brazilian rare earths or others, actually being a bit of a game changer in cost profiles. Capital costs, IXR have put some numbers out. They were around 100 to 200 Aussie million, that is. I'm interested to see Meteoric's numbers come out. They're planning a scoping study to be announced sometime this quarter, so we're really looking forward to that. But if I look at an equivalent gold project for 5 million tonnes per annum, Capricorn Metals, they did it for about $200 odd million. Add in some extra money around the electrolyzer costs for producing hydrochloric acid and sodium hydroxide, and also depending on your power profile as well. All these projects need lower power costs to really make them work well. So wind, solar, etc. So look, it gives you some ideas. There's no numbers I'm putting my hand on my heart yet, but we'll tell you the numbers towards the end of the year.
Excellent, Brett. Looking forward to that. So our next question. So other than grade being a main profit differentiator, can you explain why total reagent cost is what investors need to be focused on?
Yeah, so total reagent costs, everyone looks at what the leaching steps are. So we all know that we need an acid, whether you're sodium hydroxide, sulfuric acid or hydrochloric acid. Sorry, wrong way there. We all have that pH adjustment that's needed. You also then need to, at the end of the day, adjust that pH back to neutral, both to dispose it from an environmentally friendly point of view, but also to precipitate out your final products and remove impurities. So what the market hasn't seen yet, especially from a lot of the ionic clays, is actually what their consumptions are across the whole process. The only one that's really done it is Aclara. They've also included flocculants and carbonates, etc. We've put out where we think our reagent cost will be as well. We really need that to be clear for people moving forward, so people can actually do a proper comparison and probably get rid of the silly debate that's happening around ionic versus non-ionic. It really needs to be around what your total recovery is, what your refractory element portion is that will never be recovered, and then what the total cost of reagents actually is, because all the mining costs and everything else should be really similar.
Thanks, Brett. Our next question. Why are most rare earth stock prices, including OD6, down significantly over the last 12 to 18 months? And what do you think will turn the sector around?
Yeah, so it's a good question. You look at Linus there, share price is down from $10, $12 down to $6, and it's really based around the rare earth price. So the rare earth price has come off that $120 plus a kilo NdPr price down to where it sits at $55 a kilo. That's brought existing operators' profits right down, and that's also then brought market sentiment down. We don't think those prices are sustainable at those. The incentive price to bring on new projects in hard rock world is closer to $100 a kilo. Long-term operating costs for a lot of these projects are also sitting $65 to $75 a kilo NdPr. So look, the main reason is price drop. We think a price increase, we're leveraged to that price increase, and that price increase has to be around the corner. Otherwise, there's going to be a big deficit to production going forward and won't meet demand.
Thank you, Brett. This looks to be our final question for today. Will you be focused on selling your product to China or other Western sources, and have those discussions begun?
Yeah, so good question. So there's probably two parts. Have those discussions begun? I was in Singapore a couple of months ago, starting the introductions of the company to various parties, both China, France, the US, etc. So Japan as well, and I'll also be back in Japan next month at another conference. I'm also continuing a lot of those discussions. So yes, those discussions will be held. We're not in a great rush to lock in a partner just yet, because there's lots of machinations to go as to how best to finance the project, who the best partner is, and what the financiers will actually want to see in terms of offtake requirements, floor prices, etc. In terms of China versus the West, there's obviously a lot of government support in the US, Europe, and also Australia to westernise the process and the value chain. I think that's going to take time. I don't think China can be eliminated out of that process. I think we will still be looking to talk to China, and they'll be a valuable partner going forward, along with potentially Western supply chains that are developing at the moment as well. I think the key is for the supply chains to work. China's doing it relatively cheaply based on their labour and also electricity costs. So they are able to produce it really cheaply. So for the Western processes to be economic as a standalone function, there probably needs to be some government intervention in terms of what prices need to be paid for. But I'm not sure how that works in the long term. So our focus is probably look at both. Don't be agnostic to which way we go, but try and be the lowest cost producer you can. So when the world does change and the government support drops, we're still economic, we're still running, and we're not relying on government subsidies.
Thank you, Brett. That does cover the majority of the questions from the audience. If you do have any further questions, please forward them to info@corporatestorytime.com. Brett, do you have any final comments?
No, look, thanks for everyone's time today. We're looking forward to hopefully that share price becoming readjusted and back up to be more competitive with where the Brazilians and some of the other overseas players are sitting.
Thanks very much, Brett. This does conclude our webinar for today. So thank you all for attending, and thank you to Brett for the update. Thanks, Brett.